Folks, welcome back. Just a quick little review here, and I'm going to try to get myself back in sync with the foreign exchange markets. I haven't been watching them, admittedly, for a number of months now. So today's February 17th, 2026, and I'll just briefly take a peek at the daily charts with you here. This is the dollar index, and you find that on TradingView by pulling up the TVC version of it. And it's a mess, as most of the markets are right now. The recent highs, you can see here, we had these taken. This high was taken here and was aggressively sold off, took out that low. And it's at a time and place and price where I could argue either side. And I'd like to tell you when it's like that, I also give you like the gun to my head perspective. Like, what do I think it's likely going to do next? Well, first of all, everybody's waiting on bated breath to see if we're going to be attacking Iran. Okay, I don't think we brought a lot of hardware over there to just show it off. So I think that once that happens, once that goes hot, once the missiles start flying back and forth, um, then obviously that's going to bring some breath into the marketplace. It may not be a good thing, but it's going to hopefully break us out of this gridlock we've been in. So dollar index, we came up into this inefficiency here to get to this breaker. Gun to my head, even though we have recently just taken that low here, I'd like to see it revisit that low. And then if that fails, if we can get above this on a closing basis, then I think that we'll probably want to revisit this. So it's kind of like a wait and see. I'm not trying to position with anything dollar based. I'm trying to get myself back in sync with it. So this is what I'm doing now. These are the ideas I'm holding to at the very moment. It's not something I can take a trade on. It's not something I'm suggesting that you should use for your own analysis for taking a trade on. It's just this is me getting in sync. Okay, so these are the levels I'm watching and what I'm looking for as it pertains to inefficiencies, buy side, sell side, and the range that we're trading within. I favor presently another run lower, but if I'm proven wrong, then obviously we'll take another look at it. I'm only going to ring in the foreign exchange or Forex markets on Tuesdays and Thursdays. So it's not going to be like a steady diet. So don't be frustrated with me and saying, hey, can you talk about this? Can you talk about that? I'm only going to talk about them 2 times a week. Moving on to Euro. Euro, we had a little run above this old high here. Then it quickly gave up the ghost there, which is obviously the opposite of what we just saw on the dollar index. We've taken the sell side here, ran out, took that buy side, and now again, kind of like in similar vein with the exploration to a retest of the low in the dollar, I think that we might see a challenge up to get into this high again. Do we get there and fail above here or just roll over? That remains to be seen. Near term sell side liquidity rests here, buy side is here. I could make a case for both sides. So whether it's bullish or bearish, if I can see both sides potentially panning out, that is not high probability conditions by my definition. So if it's not high probability, then I'm not going to give you a hard line bias. But what I'm looking for is the opposite of what I said on the dollar index. I want to see if it can mount a continuation of the upside, and we'll see if we get that or not. Much in the same vein, we're looking at the pound dollar. We had a high here, took out this sell side, ran up. Sell side is resting below here, and buy side is here. I want to see if the dollar index can trade and retest its old daily low, and that would open the opportunity for cable to run, or pound dollar to run back and challenge this high. It can very well just trade above this old high here and then fail inside this gap if it's going to be bearish. In other words, if it tries to make a run there and fails and falters and goes lower, that could be it. We had this run below here. So it's again 50-50. There are times, obviously, you've seen in the past over the years with me, when I'm one-sided, it's pretty much a 90% strike rate. But if it's low probability like this, where I'm trying to acclimate myself back to the markets that I have been following for over half a year or so. This is how I start. I grab a daily chart. I'm not interested in looking at anything on the lower time frames because if I can't discern what I think it's going to do on the daily chart, those lower time frames aren't going to talk to me. So identifying the draw, identifying the ebb and flow, and we'll revisit again on Thursday. All right, now we're going to segue into the index futures. And our focus is going to be keeping with managing risk and expectations in the high volatility markets that we have right now. I can't stress it enough. You should be following in a micro contract. Okay. If you're looking at the mini, it's moving too fast. It's too fast. It's moving too quick. It's too far, too sudden. And you don't have I'm just going to say it, you don't have what it takes to stay in that and not get beat up. Okay. So drop it down to one micro, weather this first month or two of 2026, see what happens. And I'm confident that as we get closer to the spring months, April, May, I think that will be a very clean portion of the first half of the year. What we do in the summertime, obviously, remains to be seen. But then I think the fall months again, September, October, November, we'll get back into the clean runs and price action. So I kind of want to reserve all of my expectations to those times of the year. All right, so here is the continuous contract, as you can see up here. It's not the March contract. This is continuous contract on TradingView, and you'll see that this looks slightly different. But we went up into a premium wick. These are all things I talked about when we were trading here. It would go up there, and we'll look at this portion there in the March contract in a moment. So we're going to go from continuous contract to March delivery contract. So we have the gradient levels here on this wick. You can see how they used it here, upper quadrant, mean threshold, or not mean threshold, consequent encouragement. I'm tired, to be honest with you folks. It is what it is, right? So and I'm not going to edit that out. It drops lower into this suspension block, which we watched real time as it was unfolding, trades up into it here, gives up the ghost, goes lower. We have a small little volume imbalance. It used that for this particular day. And then we created another volume imbalance, which once it traded down into this volume imbalance, came right back up into that, tried several times to make a run above it, failed, dropped lower. And this volume imbalance, if it gives up the ghost on a closing basis, not only am I looking for this sell side as a draw, but this right here, I think, if things get heated in Iran and in the Middle East and all that, with Israel, I think that we'll see our markets trade down here. That's what I'm focusing on the first half of the year. That's my target. Now, does that mean it's going to go right from here and go down there? It could, but I want to see what we do with this small gap. Does it stay open? Because it could be a breakaway gap. So basically, what I'm saying is, I'm presently bearish on stock index. Okay, I think that we're going to go lower, more likely to go lower than we are to go higher. Now, moving into the actual March contract. Okay, so you can see that's the March delivery contract for micro NASDAQ. We have the suspension block here. It trades up into the consequent encouragement of that. I mentioned that this inefficiency here with these relative equal highs, that's the draw on the daily chart. And we ran up into that and then gave up the ghost, went into the suspension block, which I told you to look at that on the daily chart, have that annotated. We went lower, came back up into consequent encouragement, volume imbalance, sells off, volume imbalance multiple times in here, like we just saw in the continuous contract. Broke lower. There's a small gap in here. I want to see if does this stay open, because if it stays open and we take that low out, this is breakaway, and we could potentially work down into these lows. Okay, so that's kind of like what I'm comfortable with that opinion right now. But please don't take this as trade advice. It's not meant for you to go out and take risk. Just observe and study. Okay. The markets are extremely volatile right now. They're absolutely disorganized and you can get hurt really, really quickly. So, trading one micro contract in your demo account is what I'm advocating. Okay. Or tape read. Don't even try to do anything else. If you don't listen and you hurt yourself, you did it to yourself. If you make money, I don't want to hear about it. Okay.